Hey guys, welcome back. In today's video, we are talking about the best AMC earnings, how we're seeing AMC 14X, the short paying dividends, and many more in this video. Now, Adam Aron, as you know, today has very big news. So he talked about the Q2 earnings. And remember, he talked about this on the 16th of July. And he said that many of you will be keenly interested to learn more. So the reason why he said this is because as we see the earnings being released today, we've had some very good news. Now, we were already expecting AMC to do well and beating expectations, but this has gone above that. So when we take a look at the total revenues, we ended at 1.6 billion, which was up 14.2%. And this is compared to the second quarter of 2025. What's even more important was what we saw was the adjusted earnings was a 104.3 million compared to a loss of 0.5 million, a 104.8 million improvement. The adjusted EBITDA was 321.4 million compared to the 189.5 million, up 69.6%. And the cash and cash equivalent at June 30th of 2026 was 778.4 million compared to a 423.7 million, up 83.7%. So many good things. Now, firstly, we've already talked about this. The efficiency of AMC is important, and we're evidently seeing this. So as we see the box office boom, as we see the box office thrive, you're seeing how AMC is benefiting from this. And this is why we're looking at adjusted net earnings to have improved. This is why we're looking at adjusted EBITDA to have gone up by 69.6%. What's even more important is, of course, the cash and cash equivalent. We are now seeing a net cash of 778.4 million, and this obviously means a lot of things. Firstly, a bigger cash pile means AMC has the possibilities to do multiple things. Now, one of the biggest reasons for why we're able to see AMC do so well in Q2 is because of the investments in infrastructures they have made, which allow them to be efficient. So the very fact that they have this much money still and is able to make even more improvements, even more investments, you can understand why the earnings, the revenue is going to go up, why the earnings will also go up along with that. Now, some things from Adam Aron, who had talked about how the second quarter of 2026 was nothing short of extraordinary for AMC. In 106-year history, never before has AMC had such superb results. So we already talk about how this was big, and evidently you're seeing the market react to this, where we are up 24% with still 2 hours to go. So when you take a look at potential news that may be released, which talked about how AMC earnings are good, but it's still not as good as what we're expecting, if you see articles like this, you can already ignore that. Of course, if you want to take a look at different perspective, you can, and that's something that I always recommend, but we know for sure right now on the path that AMC is going down and how well we're doing. Going back to what we said with an old tweet from Adam Aron is what I said in the past before. Whenever he tweets certain things about AMC, it's because he knows exactly what's going on and he's dropping hints. For those of you who would have been aware of this, again, the fact that he was already talking about how many of you will be keenly interested, it already talks about how he knew that the results was going to be well. He knows that the methods that he has done, the strategies that he has implemented have been extremely effective for AMC. And many of you who, of course, took it would have obviously reaped the rewards. Bear in mind, on the 16th, we ended the market at 207. We went to the low of 195. The next day on the Friday, we closed out 194. And today we're up 24%. So this is what we said with how, not just from this tweet, but many tweets in the past before, is definitely Adam Aron dropping hints. And this is just one of them that is a very, very obvious one that, again, just really confirms what we've said in the past. Now, another big reason for why this is big is because the analyst expectation on AMC was a loss of 0.01 per share. So they're talking about the EPS of minus 0.01 all the way up to minus 0.06. Whereas when we look at AMC, we're actually looking at 0.14 per share. So a 14x and higher on the EPS. And that's a very, very important thing. And this really just talks about how going into the future, AMC is going to thrive. Going into Q3 and Q4 and how we're already seeing how well we're doing right right now, and with the movies that are going to come out, AMC is already on the path to do exceptional things. So this is how we understand that more and more people are realizing the opportunities. This is what we said the whole time with how we knew that AMC was going to thrive. We knew with the box office going up, we didn't have to worry about that anymore. It was how well AMC was able to operate within the booming box office. And this is what we're looking at right now. It's beaten expectations, it's beaten the retail's expectations. Again, this is something I've already said. We already understood that AMC was going to beat the estimates, but we are very likely going to be looking at AMC beating even the higher estimates, and that's exactly what AMC has done. And so when we take a look at this right now, remember the setup is here. We have AMC earnings doing exceptional. We have the next quarter and Q4 to be doing very, very well as well, and this is only going to get bigger. And so with the apes right now, we are looking at this very, very bullish catalyst. What's even more important is when you take a look at where AMC is right now, take a look at the chart, take a look at the fundamentals, what you will see is how it looks a lot like it did in May 22nd. But the difference is that back then, AMC hasn't delivered record quarterly revenue and record adjusted EBITDA in its 106-year history. So we see where AMC is at right now. We know the expected value from AMC. We know just how much potential there is. And so the apes have already gone in on this, but you're going to be looking at, just like what we guessed, more and more institutions to be going into AMC. And this is very obvious. And so a big part of this has been the operating leverage, where a 6.2% increase in revenue can translate to a 30 or 40% jump in EBITDA. And the massive operational efficiency is what allows AMC to cross the threshold. And this is exactly what we're looking at. So if you're expecting AMC to do even better as we go on, that would be something that we are looking at right now. And Q2 really just confirms it. The reason why I talked about how important Q2 earnings was isn't because I needed to know if AMC is doing well. We knew that AMC was doing well. We wanted to know just how well AMC is doing, because when the majority of the box office that's going to come into Q3, that's going to come in Q4, how efficient AMC is able to show us is just how much more we are able to make during Q3 and Q4. And so this is why we paid so much attention. But the fact it's already beaten our expectation, the fact it's already shown how well Q2 was doing, better than what we were expecting, this is why we talked about how it's very important. When you take a look at the inflow outflow on AMC, firstly, you can see there is a net inflow. Wherever you're taking a look at the large orders, medium orders, the small orders, it's all net inflows coming in. And this is what we've said, wherever it's institutional buying, wherever it's retail buying, they are all eyeing up one thing, which is accumulate as much AMC as possible. What you'll find also very interesting is that actually institutions are willing to hold on to AMC even more. They want to hold on to these shares. They don't want to let go of these shares. Yes, we've recently seen UBS selling their shares, but we talked about how that was a way for them to actually get more margins. They needed to show that they could be somewhat net neutral with the AMC toxic swaps that they own. But when you take a look at this, what we can understand is that people want to buy AMC, wherever it's retail, wherever it's apes, wherever it's institutions, and not a lot of them are willing to give up their shares. And I think that's a very important factor, is that the ones with the biggest capital, despite what the media are saying, is wanting to buy into AMC. And so as we see AMC right now, we have more revenue, we have less debt. Bear in mind, we still have over 700 million, which is a endless amount of possibilities of what we can do with that, yet we still have the stock near all-time low. So if this isn't screaming deep value, I don't know what is. And this is what we've said with how this really allows us to understand how going into Q3, we're gonna be looking at a massive thing. When you take a look at the box office, you're still seeing how it's doing well. Just like we've said, the majority of the box office, and this is from data backing this, the majority of the box office typically comes in Q3 and Q4. So the fact that AMC is able to do so well now, think about how well AMC is able to do in Q3 and Q4. And we're already just seeing how well Q3 is doing. And remember, we are only just beginning Q3. We still have 2 months to go before Q3 ends, and AMC is already doing this much. And so when you talk about what they can invest, what they can improve, wherever it's in their infrastructure, wherever it's in their debt, these are all things that's going to bring efficiency to AMC. And just like what we talked about with the operating leverage, just like what we talked about with how well AMC is going to do, we definitely are expecting an even bigger results in Q3. We definitely are looking at an increase in revenue. And if AMC is able to even keep it up, let's not even talk about improve on top of what they are already doing, but even if they're able to keep up what they have done, but with an even higher revenue in Q3, think about where AMC is going to go. Think about the value that AMC is about to produce, and think about just how much potential there is for AMC. This is why I'm definitely very, very excited. And so for the short sellers, they can slow their ascent, but they cannot stop it. It's only a matter of time. And today is proving that, because AMC is on the trajectory to really, really do massive, massive things. And just like we've said with the efficiency, I'm not going to repeat it because you guys can already hear my excitement. You guys can already understand what I'm trying to highlight. But what we are already seeing right now is that turnaround. What we are seeing is how AMC is going to get bigger and bigger and bigger. And before you even know it, AMC will have the ability to pay off debts. AMC will have the ability to start paying dividends. And so for the ones who have naked shorted AMC and sold fake shares, as we see this trend continues, you will eventually have to pay dividends on every fake share out of your pocket. Remember, previously, what has been limited AMC from paying dividends was mainly because of the debt, but also because of the cash. Now, as we're seeing AMC go into that free cash flow, as we're seeing AMC slowly paying off the debt, you're seeing these barriers being removed. And so this is why we've said, before you know it, we're gonna be seeing these things happening. And the reason why a dividend is so important, one of the biggest things we talked about, is because AMC dividends will force the short sellers to start paying. And this is what we've said, the ones who are shorting AMC are in charge, and they have the number one priority of paying off a dividend when a company issues it. And so with these institutions who have naked shorted billions of shares, imagine how much they have to pay. One thing I do want to talk about is that even when a dividend comes out, I definitely do think it's going to be a game changer, but it would take time, because depending on how much AMC is issuing, whether it's 1 cent, wherever it's 10 cents, wherever it's $1, depending on the time, wherever it's monthly, quarterly, biannually, annually, these will all play into effect. And so the short sellers may be able to pay the dividends the first time, the second time, the third time. But if we see AMC keep it up, you're going to see how it's going to eat into their cash pile. Because just think about how the shorts who have shorted a billion share of AMC, even if AMC was only issuing out a 0.1 dividend, they will still have to pay $100 million on that. Now, of course, for some institutions, they would have the capital to do that. But think about if AMC were to do this monthly, if AMC were to do this quarterly, think about how eventually it will eat into their capital. And not to mention, I'm only giving the number of 1 billion. The reality is the synthetic shares are way higher than that. So the number will be even bigger than that. Because when we take a look at on companies like Webull, we see 2.5 million people tracking AMC, and that's just in Webull alone. Now, you add in the countless other brokers are out there, whether it's E-Trade, Fidelity, Robinhood, and any others. If you're, whether you're European, wherever you're in Asian continents, these are all investors who are tracking AMC. So it's way above what we think it is. And the fact that they have been stealing from us, the fact that they have been creating all of these synthetics to fulfill the demand with all of these millions of apes, you can understand just how many shares have been created. And when you take a look at the data, the average apes hold stocks 5.5 to 7 months. Sorry, the average retail shareholders hold stock 5.5 to 7 months. Average AMC apes, maybe 5 years. So they've issued IOUs, they've buried access to real shares deep in years of swaps and rehypothecation. But what we can see is how we are slowly digging through all of that. We are seeing the shorts slowly getting burnt from this. And so the overconfidence of AMC short sellers is what will be their end. And I think a big thing from this is what we talked about with short sellers like John Hempton, who talked about AMC going to bankruptcy when we went below $1. And this is an example we'll bring up all the time. When AMC was at 0.93, bear in mind, people were screaming bankruptcy. People were screaming delist of AMC. But now we see how AMC has done the complete opposite of that. And so this is how we've said that these guys who are overconfident, who thought that AMC was going to go bankrupt, who thought that AMC was never going to make improvements, were clearly proven wrong today. They've been proven wrong in the past already. But today, I think is definitely a big part of showing just how well AMC is doing, and more importantly, how well we're going to be doing in the future. Because it's no good if we just do well in one quarter, then bad in the next quarter. But AMC is going to continuously improve. It's going to stay at the very minimum constant of what we're doing now. But bear in mind, even if AMC is doing the same thing this quarter, but we have a higher box office next quarter, the earnings, the fundamentals, it's still going to improve. Not to mention, AMC is still improving infrastructure to become even more efficient. And so for the short sellers who are so underwater on AMC that all they continue to do is create constant shares that don't exist, with these 6+ years of fake shares hoping for bankruptcy, it's not going to happen. Once again, today has proved that. But it really just shows how the fact that they have been doing this for the last 5-6 years, the fact they have been trying to convince apes to sell, the fact they've released countless articles talking about how AMC is never, ever going to improve. Again, all of these are being proven wrong today, and they will continue to be proven wrong going into Q3, going into Q4. And once again, it will just be a matter of time until AMC fully goes debtless. And so when we take a look at this, AMC is not going to go to 5, not 10, not 20. It's going to go way higher than that. And today is just a proof of that, with the billions of synthetics that they have created, with the billions of shares that they are trying to scrape up, is not going to save them, because apes hold the real shares. Apes hold every shares. We have forced them to create synthetics, and AMC has allowed us to stay afloat. AMC has allowed us to stay alive. And so this is a work of both apes and AMC working against these institutions, and we have been doing the right thing. We have been battling against these guys, and we are seeing the victory right now. As always, known as F Financial Advice, and I'll catch you guys next time.